Hey there, financial explorers. Welcome back to Money Hunters, and today, we're diving into the world of mutual fund investing. Whether you're a complete newbie or looking to refresh your knowledge, you're in the right place. By the end of this video, you'll have a solid grasp of mutual funds and how to start investing in them. So, let's get started. Segment 1. Understanding the basics. Before we jump into the nitty-gritty, let's start with the basics. So, what exactly is a mutual fund? Well, imagine a big investment pool where numerous investors come together to pool their money. Professional fund managers then take this pool and invest it into a diversified portfolio of stocks, bonds, or other assets. Segment 2. Advantages of mutual funds. Now that we know what a mutual fund is, let's talk about why they're a popular choice for investors. Here are a few advantages. 1. Diversification. Mutual funds offer instant diversification, spreading your risk across different assets. 2. Professional management. Experienced fund managers make investment decisions on your behalf. 3. Liquidity. Most mutual funds allow you to buy or sell shares daily, providing liquidity. 4. Accessibility. You can start investing with a relatively small amount of money. 5. Variety. Mutual funds come in various types: equity funds, bond funds, index funds, etc. Segment 3. Types of mutual funds. Now, let's explore the different types of mutual funds. 1. Equity funds. These invest primarily in stocks, aiming for higher growth but with higher risk. 2. Bond funds. These invest in fixed income securities like government or corporate bonds, generally offering more stability. 3. Index funds. Designed to replicate a specific market index, these offer broad market exposure at lower costs. 4. Sector funds. These focus on specific industries like technology, healthcare, or energy. 5. Balanced funds. A mix of stocks and bonds, balancing growth and stability. Segment 4. How to start investing. Alright, now the exciting part: how to start investing in mutual funds. Follow these steps. 1. Set financial goals. Determine your investment goals: retirement, buying a house, education, etc. 2. Risk assessment. Understand your risk tolerance. How comfortable are you with market fluctuations? 3. Research. Research different mutual funds. Look at their past performance, expenses, and the fund manager's track record. 4. Choose funds. Select funds that align with your goals and risk tolerance. 5. Open an account. You'll need a brokerage or an investment platform. Some popular ones include Finity, IND Money. Link is given in description. 6. Invest and monitor. Buy the funds you've chosen and keep an eye on their performance over time. Segment 5. Tips for successful investing. Let's wrap up with some quick tips to make your mutual fund investing journey a success. 1. Stay consistent. Investing is a marathon, not a sprint. Stay consistent even during market fluctuations. 2. Review regularly. Periodically review your portfolio to ensure it's aligned with your goals. 3. Avoid over-diversification. While diversification is good, too much of it can dilute your returns. 4. Keep an eye on fees. High fees can eat into your returns. Option for funds with reasonable expense ratios. 5. Educate yourself. Continuously learn about investing. Knowledge is your best ally. And there you have it, a crash course in mutual fund investing. Remember, investing is a journey that requires patience, research, and a willingness to learn. Start small, stay informed, and watch your investments grow over time. If you found this video helpful, don't forget to hit that like button and subscribe for more financial wisdom. Until next time, happy investing. Disclaimer: remember that all investments carry risks. Consult with a financial advisor before making any investment decisions. This video is for educational purposes only.